Do you think LLC taxes are a nightmare? I did too, until I learned the rules of the game. And I discovered these game-changing tax benefits that save my business, along with all of my clients, thousands of dollars every single year. Hi, I'm Harrison Patton, founder of Kaizen Accounting. And just like you, when I started my business, I thought that LLC taxes were going to be a nightmare. I thought it was going to be a huge headache, but I was wrong. Today, I'm sharing the ultimate guide to LLC taxation and the benefits that come along with having an LLC. Stick around because by the end, you'll learn how to save thousands of dollars every single year for your business. So first, let's bust a myth. LLCs aren't as complicated as you might think. Unlike C corporations, LLCs use what is known as pass-through taxation. This means that business profits flow directly through from your business onto your personal tax return. So you're avoiding the double taxation that the big C corporations face. For example, if your LLC reports $100,000 of business profit, then that flows directly onto your personal tax return rather than being reported as a separate entity. That's a huge win, so you can save money on taxes by not getting hit with the corporate tax rate along with your personal taxes. So the second thing to know is that deductions are everything in the tax game. LLCs can deduct so many of their expenses off of their tax bill if they keep proper documentation. So things like marketing, meals, and travel, if they're all an effort to gain clients and produce revenue for your business. All of these expenses come as a reduction off of your net income to get to your net profit. Where it really gets powerful is when you start to turn your mindset to turning your personal expenses into business expenses. So things that qualify here would be your phone bill, your internet, and even meals, as I mentioned before. It's important to note that it might not be the 100% of that cost, but you can at least get a portion back as a business expense. Once I learned this, it really opened the tax code and the possibilities of the strategies that you can implement to lower your tax bill for me. So the third one is a bit of a more professional move and something that you would focus on later on once you have the basics of deducting your personal expenses as business expenses. And what that is the retirement accounts. So what you want to do is you want to set up a retirement account like a solo 401k or a SEP IRA. These let you tuck away profits tax-free while reducing your taxable income on the contributions. For example, contributing $20,000 to a solo 401k could save you thousands of dollars on those contributions. According to IRS rules, in 2025, LLC owners can contribute up to $23,500 to their solo 401k. So not only is this giving you tax savings, but it's also growing your wealth and fueling your wealth for the future. Now, the biggest tax hack that I often see overlooked, and it's so simple that it makes me so sad to see people overlooking it, is making the S Corp election. So by electing S Corp status, you're separating your profit into a reasonable salary and owner's distributions. So by paying yourself a reasonable salary, which you have to make the S Corp election to do, you can reduce self-employment tax on the rest of your profits. I've seen clients save well over 10 grand a year by making this simple switch, which all it takes is filling out a form. But with that said, make sure to consult a tax professional if you're going to look to see if you qualify to do this, because it is a lot of extra paperwork and you want to make sure that you do everything correctly. So the form that you need in order to be taxed as an S Corp is Form 2553, and this is a simple form that allows you to make the S Corp election. This allows you to get S Corp status and allows you to take advantage of this great strategy. So now we've talked a lot about the things that you should do, but I'd also like to cover the flip side and talk about things that you should be sure to avoid and mistakes that we don't want to see you making. So you should avoid these traps. Not tracking expenses, because this means that you're going to be missing out on potential deductions that you could be using against your business income. The second trap that you need to avoid is missing the QBI, or the qualified business income deduction. This is a deduction of 20% off of your taxable income from your qualifying business. And the third trap that we need to make sure that we're avoiding as business owners is failing to file and pay your taxes on time. All of these strategies are not worth it if at the end you're getting hit with all of these penalties from the IRS because you failed to file an extension or file your tax return on time. And it's key to remember that even if you're filing an extension, you need to pay your estimated tax liability on that April 15th filing date. And it's okay if right now you don't have all of this 100% figured out. I've had clients who in the past missed thousands of dollars in deductions, but after working with me, they were able to get everything organized and we were able to find the missing holes that they weren't filling. So LLC taxation and the taxes that you owe on your LLC don't have to be a nightmare. With pass-through taxation, retirement accounts, deductions, and S-corp status, there's so many strategies just on the basic level that can make a huge difference in the amount of taxes that you'll owe at the end of the year. I've seen hundreds of business go from tax stress to tax success, and yours can too. Just remember, the tax code was written to help you as a business owner, not to hurt you. So if you're ready to start maximizing your LLC tax savings, be sure to hit subscribe so you can get more tax strategies and in-depth breakdowns on this channel here in the future. Additionally, if you want more resources, check the link down below and you can get my tax-free playbook, or you can look to schedule a discovery call with me and my team to see if we can help you personally on your tax savings journey. So that's all from me today. I hope you enjoyed the video. I'll catch you next time. HP out.